Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look. Going to take a look at the New Zealand versus US dollar and the Aussie versus US dollar. 2 for 1 in this video. Why is the price moving lower? What are the next targets? What are the risks? I'm going to go through it all in this video, so let's get started. Start by taking a look at the New Zealand versus US dollar. And technically, from a price perspective and a technical perspective, the price last week moved up to test this 100 bar moving average, found willing sellers against that level, and that started the move to the downside. The price then broke below the 100-day moving average here. We broke below the 50% retracement and the underside of this trend line right through here. And it was to the downside closing the week right around this level. And trading today, the initial move is to the upside, and we tested the underside of this broken trend line right here. Found willing sellers against that level and has since moved lower. The move to the downside initially found support against a 61.8% retracement of the move up from this low to this high. Then after a brief move back to the upside, the retracement level was indeed broken, and that's the recent move to the downside here. This 61.8% retracement is now close risk for traders. As long as the price can remain below this level, the downside probing can continue for this currency pair as it works its way further down, and maybe even down to our low price that we saw in the month of April. We will see. But what we know is that as long as the price remains below 61.8% retracement, the sellers remain more in control. So watch this level as close resistance. If the price can stay below that level, then then look for lower prices. If the price moves back above that level, we could see more upside probing on the failed break below the 61.8% retracement. So be aware of that level. Next, let's take a look at the Aussie versus US dollar. And again, I'm going to look at the 4-hour chart. And in this case, the price of today fell below this trend line here. We also fell below the 200 bar moving average on the 4-hour chart. That level comes in at 0.66789. That opened the door for downside momentum, and that momentum has continued with the price now testing the 38.2% retracement of its move up from the April low to the high price that we saw 2 weeks ago. That level comes in at 0.66316. If the price can get below that level, the 100-day moving average and the swing area would be targeted. This 100-day moving average will be key for the Aussie versus US dollar. If we break below that level, we still have the 200-day moving average to get to and through. That's this green line right here. Also the 50% retracement. So it's not over until these levels were broken as for the chance for a bounce back to the upside. But it would increase the bearish bias if all these levels can be broken on the downside. So be aware, be prepared. Conversely, if the price does find support right here at the 38.2% retracement and against this area right through here, where we have a number of different support levels, then we could see a rotation back higher toward the 200 bar moving average. Do you like to buy it or do you like to sell it? This is an area for you to decide what you want to do with limited risk. If the price does go below that level and you're bullish, get out. If the price goes cannot get below these levels and instead bounces higher, you might want to think about covering because we could see further probing to the upside. Now, fundamentally speaking, for these two currency pairs, why are they going lower? Well, China did cut rates today because of slow growth in China. That is a problem for both these countries as they rely on China for export growth. Commodity prices are also lower. Also, both Biden and Trump and now Harris may be more negative for the China economy as they concerned about Trump wants to increase tariffs on China goods. Also, the Biden administration is not too friendly toward China as they limit the amount of chip sales for security reasons, and may indeed also look toward tightening some tariffs on some of the goods to bring American competitiveness up. So that's not good for China. That's not good for New Zealand and Australia, and perhaps that is leading to the downside momentum seen in both these currency pairs. So that's my technical look and a little fundamental look at both the Aussie and the New Zealand versus US dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.